In my day, a lot of the finance people were more like engineers. They were so chastened by the Great Depression and all the wretched failure that they really tried to make everything super safe.
Imagine you're a college student looking for a passive source of income. You heard that your friend was trading in the stock market and could generate a passive income, and you went to him for investing advice. The democratic nature of politics makes inflation inevitable over the next 100 years. And as we are all aware, at this time in 2023, the economy is currently facing some very significant issues. The interest rates are also very high, and saving rates are low due to the recession. Charlie Munger, a multi-millionaire who serves in several roles, including the director of Daily Journal Corporation and the long-time vice chairman of Berkshire Hathaway Incorporated, the holding company of the illustrious Warren Buffett. Additionally, his decades of investment experience makes him a valuable resource to discuss with. He has also experienced several recessions, including the financial crisis in 2008, the dot-com bubble, and the crisis of the 1970s and 80s. Munger said there is trouble ahead in the US commercial property market, and the US banks are trapped with bad loans that will be vulnerable, and the property prices will fall. Munger's advice came as US regulators have asked banks for their best and final takeover offers for First Republic, as the current period has been tremendous for mid-sized banks. Moreover, he added that real estate isn't good anymore, as we have a lot of troubled office buildings, shopping centers, and other properties. Furthermore, during Berkshire Hathaway's annual share meeting, Munger said that the value investors will have a harder time as they are looking for diminished opportunities, and added that value investors should get to making less from the market. Moreover, he said that investors should give away short-term approaches, start finding high-quality companies, and let those investments compound over time. Before making any significant financial decisions, investors should consider their skill level, according to Munger. And for individuals who find investing challenging and perplexing, Munger said to welcome them to adult life. In addition, he noted that the financial climate of today is entirely different from that of the 80s, and that anyone can now make investments in conventional and alternative investments using a smartphone. Munger added that anyone could invest as little as a few $100s in startups and real estate, and he used this advice that an intelligent investor could make a 10% return by owning a diverse portfolio. But he now acknowledges that there is no longer a foolproof strategy. The man stated that I don't think the future would present the young kid graduating from college in 2023 with an easy investment opportunity. Despite recent volatility, the S&P 500 has increased by 5% since 2022 began. However, Munger and Buffett's investment success was developed via perseverance, so adopting their approach might be the wisest course of action in the long run. Even the finest investors can make mistakes occasionally, so Munger's most recent advice is particularly significant for young investors struggling with the stock market. In addition, he noted that the current state of the market is comparable to that in the 1970s, where inflation was on the rise and the Federal Reserve was under pressure to stop it at all means, even if it meant a recession. Munger said that since the collapse of Silicon Valley in March, the attention has turned to the First Republic as they are the weakest link in the American banking system. Before recording a positive GDP in 2022, the US had already experienced 2 consecutive quarters of negative GDP growth, largely due to high energy export prices. However, several variables such as high interest rates, high bond yields, increased layoffs, and declining business sales and earnings explain why a recession will occur in 2023. A chain reaction in the economy, higher labor expenses, and the wholesale cost of commodities, materials, and energy bills further reduced company profit margin environment because the recession will likely coincide with rising inflation. It is up to each person to make their own decisions, as is typical in all human decision-making. Munger said in response to the CNBC interviewer's questions on how this will all turn out and what advice he has for aspiring investors. According to the current health of the US financial system, the Federal Reserve identified that commercial real estate prices have decreased, but the valuation has remained high. Moreover, according to the Fed, banks hold 60% of commercial real estate loans, of which small lenders hold 2/3. Capitalization at the time of purchase measures the annual income of commercial properties relative to their prices, which has turned up modestly from the historical low levels. The fact that an investor does not need to diversify, that 4 assets will perform well if you're attempting to outperform the typical investor, and that very few people possess the intellect to make 20 solid bets are all essential lessons we can learn from Munger's portfolio. Additionally, Munger counseled new investors to focus their funds on a few investment ideas rather than waiting for macroeconomic variables to relocate the funds, and to start by planning everything in their heads. According to Munger, the best didn't expect to find 10 or 20 firms and just needed 1 or 2 stocks, and advised novice investors that the people who tend to get best results are the fanatics who keep searching for great businesses. Furthermore, he claimed that if compounding is done well, there is enormous potential but fierce competition. Avoiding the enticing mayhem around you would be beneficial when there are intense incentive pressures. Furthermore, he asserted that gambling is similar to using heroin in that some users just overdo it, that it is addictive, and that society would have been far better off without it. He claimed that the stock market is where we can find 2 different types of individuals, and that if we hadn't interfered as we did, we may have suffered one of the most sinister financial losses, and we're on the verge of something worse than the Great Depression. When we combine people who invest for the long term with those who gamble at casinos, the results will be complete nightmares for the nation. Speculative trading boosted meme stocks and shares in many risky companies during the COVID-19 lockdown and helped retail investors tremendously. He believed that speculative trading caused the Great Depression, which started with the stock market crash in 1929. As Munger was giving the interview, meme stocks like GameStop and AMC surged 100-fold. However, before the speculation-driven bump, AMC was at risk of bankruptcy, and GameStop was only a fraction of what it had ballooned up to. Now that the market conditions have changed dramatically, meme stocks have seen good days, even in 2023. Before the pandemic, Chinese stocks were among the fastest growing stocks and performed well. However, everything changed when political tensions with the US began. Since real estate prices typically increase at a minimal rate with inflation in value, flat homes make ideal inflation hedges. Additionally, since people need places to live and pay rent during a recession, flat rentals are a suitable option. The newspaper legacy of Munger is yet another investment and a poor business strategy in 2022. It would be prudent to take note of his success principles, as while looking over his portfolio, we can see that 3 of the 5 investments he made in short term weren't terrible, and he played the long-term game to become a billionaire. In a speech to Buffett's investment manager at Singleton Price for CEO Excellence, Munger emphasized the value of attention, patience, and independent thought for anyone hoping to outperform the market. He highlighted the immense threat that nuclear war poses to the planet and complimented the US government for averting an economic catastrophe during the pandemic. Berkshire Hathaway controls numerous businesses that market high-quality consumer goods and has some negotiating leverage. Insurance is the company's largest revenue stream, and as we all know it is crucial to maintain coverage, especially during a recession. Additionally, the corporation raises capital during bear markets and even for entire enterprises using the insurance money as its cash flow. Warren Buffett, the company's owner, is a wonderful investor, so there shouldn't be any hesitation when investing in a business like Berkshire, particularly in tough economic times. Costco, another business in Munger's portfolio, is essentially recession-proof due to its many fairly priced products. Hence, investing in value-added stocks can give you returns in the long run. I hope you enjoyed the content, and if so, don't forget to like the video and subscribe to the channel. Do share your valuable thoughts in the comments section as well. See you next time.